Welcome to the Tuesday edition of the Tech Stocks Daily Podcast, where we dive headfirst into the bustling world of tech stocks. Today, we'll unpack the thrilling buzz around Microsoft, with eyes on mysterious options trading and upcoming Q2 earnings amidst UK regulatory challenges. But that's not all. Get the scoop on Apple's steady revenue and sizzling services growth, along with urgent security updates. Plus, don't miss Zscaler's latest partnership with SAP, innovating the shift to secure cloud migrations. Finally, discover SAP's stellar financial results, showcasing their ambitious cloud impact. Buckle in, techies. It's a jam-packed session of insights and updates you won't want to miss. All right, tech enthusiasts, strap in, because today's tech update is all about Microsoft. It's been a really busy day for the tech giant, making waves across multiple headlines, so let's dive in and break it down. First on the buzz radar, we've got a case of the mysterious options trading activity. Microsoft stock was caught in the crosshairs of some deep-pocketed investors. Benzinga's optics picked up 35 unique movements in Microsoft's options, more than a third featuring calls and puts worth over a staggering $2 million. While 60% of these plays are bullish, 22% are eyeing a bearish turn. Typically, when hefty investments like these pop up, insiders might know something big is about to unfold. We're talking about potentials ranging from $220 to as much as $580 per share, with some seriously drama llama over Microsoft's trading strategies. Talk about putting your money where your mouse is. Next, we shift gears to Microsoft's industry positioning. It's like throwing the tech giant into a mud wrestling arena filled with numbers, grappling against its competitors in the software industry. Despite Microsoft stock's exuberant growth vibe, there are some pro-con situations. For example, its price-to-earnings ratio undercuts the industry average, waving a flag at potential undervaluation. But the high price-to-sales ratio paints a whisper of overvaluation, reminding us that sometimes looking at the glass half full takes a backseat to good old financial responsibilities. But wait, there's more. We have K2 Services upping their partner game with fresh accolades from Microsoft, earning new partner designations for Azure infrastructure and modern work. These designations help K2 Services raise the bar with enhanced support and boosted productivity in delivering high-quality services in Microsoft environments. Talk about a relationship upgrade. Now, buckle up, because Microsoft's Q2 earnings are just around the corner. With its stock chart riding a bullish roller coaster thanks to supportive moving averages and an optimistic MACD, the question on investors' minds is whether this trend will stay on track. While Wall Street projects Microsoft to report some strong numbers, like earnings per share of 3.12 on a lofty $68.6 billion revenue, tricky wins like foreign exchange headwinds and competition heat from hyperscaler rivals might meddle with short-term momentum. Finally, Microsoft and Amazon are under a scrupulous UK antitrust lens over cloud competition. The UK watchdog flagged a dim spotlight on these big kahunas, concerned they might be cornering the market. Microsoft defended its cloud game by nodding to market dynamics, but nonetheless, the regulator hinted at stricter oversight under new acts. Will the British regulators rain on Azure's parade, or will cloud giants continue their skies-high reach? So wrap up your thoughts on this wild Microsoft trajectory today as they pull a lot of levers, from potential financial maneuvers in options trading, strategic industry positions, product certifications, quarterly earnings on the horizon, and regulatory hurdles overseas, proving once again that Microsoft is far from boring. They're in it to win it, bringing innovations while navigating both opportunities and scrutiny. Today, Zscaler made headlines by introducing a new security solution in partnership with SAP aimed at enhancing cloud migration for businesses. They are rolling out their Zero Trust Network Access service, which is now natively integrated within the RISE with SAP framework. This means businesses using SAP's cloud services can now leverage Zscaler's Zero Trust Exchange platform more effectively, making their shift from traditional on-premise environments to cloud-based ones both simpler and safer. Why is this a big deal, you ask? Let's break it down. In the world of cybersecurity, the term zero trust signifies a model of security that assumes that threats could arise both outside and within an organization. Rather than trusting devices by default once they are inside the network, the zero trust model insists on constant verification of the user, device, and access request context. This makes it way harder for cyber attackers to exploit access vulnerabilities, keeping sensitive data safer. Zscaler's ZTNA service, tailored for SAP, aims to do away with old-school firewalls and VPNs, which, according to their 2024 VPN risk report, are Achilles' heels for organizations. 56% reportedly suffered attacks involving VPN vulnerabilities last year. Thanks to this new integration, IT departments will be getting a sleeker and more robust architecture to protect an organization's critical ERP infrastructure. Moreover, this Zscaler SAP combination significantly aids in safeguarding SAP's S/4HANA applications across various cloud setups, whether multi-cloud or hybrid cloud, meaning if your workload is distributed across different kinds of clouds for redundancy or distribution load sharing, you're in safer hands. The highlight is that Zscaler data protection tools enhance compliance, and their digital experience monitoring tools make sure user experiences remain top-notch. Leaders from giants like SAP, Siemens, Volkswagen, and others are backing the integration, highlighting that it simplifies SAP systems migration to the cloud. Plus, it keeps everything secure, without compromising performance, which should be music to the ears of companies with a diversified, hybrid workforce needing access to resources globally. By adopting Zscaler's ZPA, organizations will experience a paradigm shift in dealing with enterprise security. As Britta Sims from Accenture pointed out, this approach ensures that each access request is properly validated, ushering in an optimized security posture. Deloitte's Sachin Singh, too, anticipates this integration will streamline SAP migrations by providing a smooth and secure user experience, no matter where data is hosted or accessed. In essence, Zscaler's latest move fortifies digital transformation narratives and provides businesses leveraging SAP's cloud services and elevated security cover. Quite the power duo for anyone looking to modernize their enterprise resources securely in today's ever-evolving digital landscape. Hello, tech fans. Let's dive into the world of Apple and talk about why they've been making headlines today. Buckle in because there's a fair bit to unpack here. First up, Apple's fiscal winds are blowing steady, if with minor turbulence. The company is projecting a modest revenue growth in the upcoming December quarter of fiscal 2025, suggesting low to mid-single-digit gains, riding on last quarter's growth of 6.1%. Expectations sit at a cool $124.4 billion, showing investors a slight uptick. But let's not pop the champagne just yet. The iPhone, Apple's bread-and-butter product accounting for nearly half of its sales, is seeing some headwinds thanks to pesky competition from Chinese heavyweights like Huawei and Xiaomi. And there's the little hiccup of the delayed Apple Intelligence rollout. Now let's talk services. If Apple were a restaurant, the services segment is the side dish that's suddenly become a main course. With over 1 billion subscribers tucked under its big, sleek tech umbrella, stuff like Apple TV Plus and Apple Fitness Plus are seeing double-digit growth. All those iOS updates and app downloads, they're not just keeping your phone up to date, they're bolstering this steady revenue stream. While everyone thinks of Apple as the iPhone company, don't forget, it's also pushing boundaries in the laptop arena. According to IDC data, Apple has increased its Mac shipments significantly, so much so that it's rocking a 17.3% growth rate. This leap bumped them up from 8.8% to a solid 10% market share. Dell and HP, meanwhile, got bumped by 0.2% and 1.7% respectively. Ouch. But let's fixate on Apple's smooth user experience across all devices, a feat not even Houdini could rival. Then, there's an urgent PSA for the iPhone squad out there with the release of iOS 18.3. Yes, friends, this update not just about pretty icons or smoother animations, it's about security. We're talking severe vulnerabilities in core media and kernel that could let nasty apps sneakily gain root privileges. Old bugs like the exploit CVE 2025-24085, consider it squashed. Plus, some lingering issues in WebKit, the soul behind Safari, have also been ironed out, making sure your browsing sessions aren't unexpectedly hijacked. Finally, waiting in the tech wings, iOS 18.4, promising to hypercharge Siri's smarts and expand Apple Intelligence's language skills. So if you're still running iOS 17.2 out there, run, don't walk to your settings, and hit that update button. So there you have it. Apple's tackling competition, pushing more MacBooks, and rolling out crucial updates. Whether you're the kind who stalks their stock price or won't use any device without that backlit bitten Apple logo, there's probably never a dull moment in Apple world. Stay tuned to see how they maintain their iconic swagger and market share. All right, folks, let's dive into the SAP saga. Today, SAP SE made quite the splash in the tech news ocean with their fourth quarter financial results that made Wall Street analysts sit up straight and adjust their glasses. So what's the buzz all about? Let's break it down. First, on the earnings front, SAP exceeded expectations with adjusted earnings per share landing at $1.49, comfortably beating the analyst forecast of $1.40. When it comes to revenue, they also outshone the experts with a hefty report of $10 billion, which was a nice leap over the anticipated $9.17 billion. That's right, SAP's accountants must have been wearing capes under those suits because they turned some serious numbers for the quarter. But the real superstar of the report is SAP's cloud segment. The company's cloud backlog made a splash with an impressive growth of 32%. And if you like constant currencies, that sparkles up even more at 29%. This means SAP's pushing the right cloud buttons, loading up their digital rain clouds with heftier profits. The IFRS and non-IFRS cloud gross profit also made leaps and bounds, adding those hearty percentages that investors love to see popping like fireworks on New Year's Eve. CEO Christian Klein did not shy away from some strong words, noting that the ending of the fourth quarter was as gleaming and triumphant as a superhero rolling credits. SAP reached double-digit growth yet again, and Klein optimistically laid down future projections that sound as promising as getting the shiny, new gadget you've been eyeing. Part of the big picture growth anticipation includes a messaging dressed in data and AI-powered solutions, anticipating a revenue rocket boost right into 2027. For financial voyeurs and investor devotees, SAP is projecting some compelling figures for fiscal year 2025, with cloud revenue expectations taking the stage at 21.6 billion to 20.9 billion euros. That's a juicy 26% uptick year over year. Not to forget the glamorous guest appearance of their overall cloud and software revenue, stepping up 11 to 13% to a cool 33.1 billion, 33.6 billion euros. If these numbers were cast in a movie, they'd definitely weigh in as a blockbuster event. For those invested in trendy financial habits, look no further than SAP's stock brownies of good returns. The stock jumped a charming 61% over the last year. That's frankly better than most of my houseplants at sustaining growth over time. And if you're looking to sprinkle some SAP magic into your portfolio, options sneak in via strategies like SP Funds, S&P Global Technology ETF, and Amplify CWP International Enhanced Dividend Income ETF. Before I wrap this up, I want to hear from you. What do you think about SAP's cloud ambitions and the overall performance report? Pour your thoughts into the comment section below, and let that neural network of friends tell us your insights. Dive in, share away, and let's geek out over SAP's cloud parade. All right, folks, let's dive into a little would I buy, sell, or hold with the news we've dished out today. Let's focus on Microsoft, because there's a lot stirring in their techie teacup. Now, if I had my technological crystal ball out, which, let's be honest, is more like a cartoonish eye sphere, I'd lean toward a hold position for Microsoft right now. Here's why. First off, we see the intriguing activity in Microsoft's options trading, with some investors making big, bold bets. This usually suggests an expectation for significant price movement. But remember, options riding the bullish wave means someone's placing trust, or maybe just hoping for a potential rally. But those bearish vibes from a faction mean there's caution lingering in the air. Also, with its price-to-earnings ratio whispering undervaluation and a slightly lofty price-to-sales whispering overvaluation, it's a bit like watching a stock on a fairy tale teeter-totter. Not too wild, but something's brewing. Another reason to stay put, Microsoft's gearing up for Q2 earnings. Those earnings are projected to be solid by Wall Street, with that $3.12 EPS eye candy dancing around. Plus, their partner programs with movers like K2 Services are getting stronger, which could translate to sustained momentum in their cloud infrastructure biz. Lastly, on the global scene, Microsoft's grappling with UK regulatory issues over cloud services, which might present headwinds. How much could this affect their global standing? Well, it remains to be seen, but addressing it with flashing sirens isn't today's code for emergency selling. So for now, Microsoft is in a dynamic but balanced spot. It might be wise to hold the fort, assess how their earnings pan out, and keep an eagle eye on potential antitrust pivots, especially on their cloud corner. But hey, whether you click buy, sell, or mash that hold button, don't be a lone ranger. Always do your own research. Check out the analyst take, poke around official reports, and maybe consult a financial guru to align this big blue stock with your financial path of destiny. Keep those portfolios tech-savvy and strategy-ready. Today's tech market saw quite a bit of stirring, with Microsoft grabbing attention through massive options trading activity and gearing up for crucial earnings, all while navigating some international regulatory storms. Meanwhile, Zscaler unveiled a key partnership with SAP, spotlighting their zero-trust security model, promising safer and more efficient cloud migrations. Apple, with its steady revenue and booming services, pushed forward with crucial security updates amid competition in key markets. Lastly, SAP's remarkable financial performance demonstrated robust cloud prowess and aggressive growth ambitions, delighting investors everywhere. If you enjoyed the roundup, don't forget to like, subscribe, and share this video with your tech-savvy friends. Tune in tomorrow for another dose of sensational tech news. Stay tech-tuned.